Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And if you've been following along each and every week, you'll know that I keep my lines on the chart from last week's forecast so we can see how accurate the charts were with regard to our projections. Now, as I zoom in, you'll see, again, there is the line that I drew last week. So in other words, there was nothing here when I drew that line last Friday, and the end of the line is my target. When I draw a diagonal line like that, my target is the end of the line, and the end of that line brings us to 258.62. And if you look, we closed right at the end of the line on my target. Absolutely amazing how accurate candle charts are. And if you're new to candle charts, just stick with the market guys. We'll teach you how to read them. We'll teach you how to read the indicators, the oscillators, the volume. You just have to have an interest and maybe a little time to study during the week. It doesn't take much time at all. But this forecast worked out perfectly, but what does that mean for next week? Well, if you look up at the top here, let me just condense the price action there. If you look, that is a horizontal line known as a flat line resistance. I take the highs and connect as many of them as I can right there. And that resistance area is right at 263.48. The way the indicators are looking right now is that we're still showing some upward momentum. I think the stochastics will go just a little bit higher. Reason being is we see an increase in volume on that green candle, so that's telling us the buyers are still in force. But don't be fooled by that, because once we hit that resistance, there's a very good chance we're going to pull back from that resistance and work our way back down towards support. We are currently in a trading channel right here, with this being support. When resistance and support run parallel, just like they are here, that is defined as a trading range or a trading channel. And this is music to the ears of all the swing traders and even the day traders. Investors get a little frustrated because overall we're just going sideways here in a narrow range. Now, what does that mean for the other markets? Well, the Dow Jones Industrial Average carries 30 stocks. And if you've been following along this week, Boeing took a very big hit and it made a little bit of recovery on Friday as good news came out. But Boeing carries a lot of weight within the Dow Jones Industrial stocks. So it's really interesting how Boeing came down for the week, but the overall market, including the Dow, went higher. So that's a slight sign of strength for the Dow, but again, that resistance is most likely going to hold. And the same story is true for the Russell 2000 index. This is ticker symbol RUT. You'll see that my forecast right here was drawn last week, with the end of the line being my target. Today's high was right on the money, hit that target. And the difference between the Russell 2000 and the Dow is that the Russell 2000 stochastic is starting to turn sideways. You see there's a little bit of a hinge here. Now, I still think we can go a little bit higher, but ultimately, I think towards the end of next week, we're going to move lower, just like that. So keep your eye on the Russell 2000. It's a more broad-based index. Obviously, it's tracking 2,000 stocks. Well, the Dow is tracking 30. Now, the SPY, which is the S&P 500, tracks 500 stocks. And this one is already showing signs of pulling back from resistance. You see the stochastics is already overbought, and it's starting to turn. The CCI, which I haven't mentioned yet, but I will now, is showing overbought, and it's starting to move lower. When the CCI drops down below the 100 line right here, that generates a sell signal. And a lot of times the CCI generates the signal before the stochastic. So we have a very quick turn here that we're looking for next week. So we hit the target on the SPY. I'm going to erase that line. And I don't think we're going to see much higher in the spiders. I think we're actually going to start moving lower, just like that. Again, this one is in a narrow trading range, and that trading channel looks as though it's holding. So that's the SPY. Now for the Nasdaq market, represented in the Qs, QQQ, you can see that we broke out over resistance, and we did so on higher volume. Okay, so this, again, we're getting some mixed signals. And while that is over resistance, I'm going to erase the resistance line and point your attention down to stochastics. That's also starting to turn lower. So I think we'll see that move just like that. Once the blue line, which is the %K, crosses the %D in this red line, that will generate a sell signal. And when the CCI crosses, like I mentioned before, below 100, that generates a sell signal. Now, if I wanted to find the next level of resistance, I'm going to have to move to a weekly chart, just like that. And you can see that the next level of resistance is really going to be a little bit higher on the Qs. It's up here close to 190. So we're getting mixed signals. I think the stochastic is really going to be the indicator that I want to pay most attention to, because it's coming off of the highs, and the CCI is still showing overbought. So I think that we could see lower prices in the Qs as well. So my forecast line is going to be just like that. All right, I'll zoom in a little bit more so you can see what I'm talking about. I think we can move back down here to fill this gap that's down there. It's a minor gap. And if you have been paying attention to my website and the gap trading strategies, you'll know that gaps fill about 80% of the time. So you might take a long position in the diamonds with a trailing stop, or you might take a short position in the spiders or maybe the Qs. It's going to be interesting because today was the expiration day for the monthly options, and so March came off the board. And the week that follows the monthly expiration is usually the most volatile of the month. So we'll have an interesting week next week, and I'm looking forward to it. If you'd like to learn more about what we do here at The Market Guys, on Monday I have an open house Q&A session. Just go to our website and you will find the registration link right down here where it says please register for open house Q&A session. That link will bring you to a page where you just put your name and email address. We do not spam anybody. We don't believe in that. The system will automatically send you a reminder so you don't forget to attend. And that's about it. Last week I mentioned that I had one more mentor spot open. And for those who are interested, I am now completely full with students. But the good news is there is a very short waiting list. I will have some openings towards the end of April and the beginning of May. So if you're interested in that, just go back to our website and send me an email right at the top. You can say contact, and you'll be able to send me a message, and I'll be sure to call you. I have to first find out if you qualify. You need a minimum of $100,000 in your trading account to make it worth your time, and I assure you it will be worth your time if you do qualify. And I could put you in touch with many of the current students and former students to get some testimonials from them on how great this program really is. We're making money. It's a great technical market, and that's exactly what we look for in trading the market. So have a good weekend. Hopefully I'll speak with you on Monday. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.